Hello, Market Insights watchers. Well, first, right off the bat, we have some exciting news to share with you today. Ian has launched a new service that we've all been working on behind the scenes with him called Sigma 180. It's a trading service like no other that takes a 40-year-old trading strategy, tweaks it with a twist, meaning Ian adds, of course, AI to it, and the back tests really show that it has a 72% win rate. So it's something that anyone who's interested in more frequent stock trading should be just all ears about. And in market roundup, January's inflation numbers are coming in hot, hot, hot. So what does this mean for consumers and investors alike? And why one particular subset of stocks are set for a breakout? Now, these stocks will be music to Ian's ears. And in Tech Megatrends, a new text to video model from OpenAI is literally rocking the artificial intelligence market. And in Crypto Corner, Ian will talk about Bitcoin's move above $50,000 to tell you about a trade that he made with his Next Wave Crypto Fortune subscribers that made 3x their money in just 3 months. He'll tell you why this trade is poised to move higher. And of course, if you're watching us on the Banyan Hill YouTube channel, hello, thank you for joining us. Please remember to like and subscribe while you're here. So let's get to it. Hello, Ian, how you doing today?
I'm good, Amber. Have you fully recovered from Total Wealth Symposium yet?
I'm almost there, Ian, but I had such a great time. Wow, so many beautiful people to meet in person. It was fantastic. How about you?
That's a great way to describe it. And I had a blast. And I've also heard that we might be doing it again next year. So watch that space.
Yeah.
And try to sign up early because I think, we were fully sold out for this one. And I know a lot of the people that were there are going to be returning next year.
Yes.
But it's been a really exciting week for us. We've launched this new service called Sigma 180, as you said. And I just want to give people kind of the backstory about Sigma 180. There's a book that I want to share. This is called The Motley Fool Investment Guide. I'm not recommending you read this now. It was written in the mid-90s, Amber, and it happened to be the first book that I ever read about markets,
Oh.
And there's something in this book that inspired me back then and continues to inspire me today, is that it talks about having a back-tested strategy that beats the market. And their specific strategy was called the dogs of the Dow. And what it was is that you buy the high dividend stocks at the end of every year or the beginning of the year, and you buy the highest Dow dividend stocks. And if you did that for up until the book was written from World War II, you beat the market. Now, that strategy doesn't work anymore. Right? These high dividend stocks in the Dow don't work as effectively as they did back then. And I think what that teaches us is that you need to continue to evolve and adapt your approach to markets, right? There is never going to be a silver bullet that is always going to be, the market beating one. And so what we've done is basically, with, of course, the help of Andrew Prince, our researcher, we've developed a strategy that takes a well-known technical indicator and puts a little spin on it. And when we back-tested this over the past 20 years, we saw that it gave us a 72% chance of actually the stock that this chose would be up 72% of the time over the next 9 months. And so we built that into basically a strategy that you can trade. Now, why am I excited about this now? Is because this technical indicator is something that everybody knows and uses, but it's almost overused. So what we did was we tweaked it a little bit and we crunched a ton of data. We crashed Andrew's computer almost daily.
Every day.
And we came up with this new technical indicator called the Sigma line, which is very simple when you actually hear it. Another thing about this service that's got me so excited is that our other research services are very thematic driven, right? We're all about trends in cryptocurrencies, AI, electric vehicles, and how those trends impact other stocks in the market. This is based purely on a mathematical and technical approach. And the idea with this service is that this is what's working now, just like the dogs of the Dow worked in the mid-90s, but we're going to continue to adapt and evolve this service as it moves forward, right? If you are a carpenter, you need more tools than just a hammer. It's the same thing with an investor. you got to keep adapting and evolving your approach. And this service is going to give us the opportunity to do that. So if you haven't checked out the webinar yet, we're going to put a link right here. Please check it out now. I think, you know, we're going to leave the subscription open, I think, for the next week or so. Then we're going to close it down because we only have a limit. We want to have just a limited number of people in it. And so please check that out. And I think I said everything I needed to say about that, right, Amber?
I'm quite excited about Sigma Line, and I hope everyone else is too. And of course, in the email that accompanies this video, all the details will be there as well with links to follow. So yes, Ian, congratulations to the team, all of us, for really trying to pull this together for our subscribers, which is our #1 priority. So let's move to Market Roundup, Ian, and there's so much happening on the economic front. It's just blows me away. So consumers are patiently waiting for a decline in interest rates before making large purchases. This is what we've learned in past week's data. From home buyers to car buyers, the burning question is, when will the Fed cut rates? And so far, based on this past Friday's Producer Price Index, or PPI data, and last Tuesday's CPI number, the wait may just be a little while longer, as both numbers came in hotter than expected. January's U.S. producer prices rose by more than forecasts. PPI final demand increased 0.3% from December and 0.9% year over year. Core PPI, which excludes food and energy, increased 0.5% month over month and 2% from a year ago, both topping expectations. January's consumer price index, or CPI, rose by more than forecast across the board. The inflation jump dampened hope somewhat for a sooner than expected Fed rate cut. January's retail sales dropped, unfortunately, by the most in nearly a year, as consumers kind of pulled back on spending amid higher borrowing costs and credit card delinquencies. The U.S. new home construction fell in January, indicating the recovery in the housing market, per Bloomberg, will be, quote, gradual, as many home buyers await a further decline in mortgage rates, end quote. Now, residential starts fell 14.8% last month to a 1.3 million annualized rate, the slowest pace since August. Now, it's good to note that although the Fed doesn't directly affect mortgage rates per se, its actions concerning the Fed funds rate does influence mortgage lenders, really by helping them make decisions on how much interest to charge on mortgage loans. So that's something to keep in mind. But checking the interest rate probability table for Fed funds rates, the rate cut chances, Ian, have now decreased. We're now looking at a 73.5% chance of a rate cut in September of this year. But where stocks are concerned, there is a silver lining. A new Bloomberg intelligence study released Friday, February 16th, shows small cap stocks' solid technicals point to the start of an uptrend. Quote, small caps look to be at the start of a renewed uptrend, as the moving average convergence divergence indicator, or MACD, which is a solid—
That's music to my ears, Amber.
Yeah, that's what I knew this would be.
We've been saying that now for a couple months. Okay.
Yes, so MACD, which is a solid indicator that shows that near-term lows over the past 2 years, is back above the signal line. A test of December's high appears imminent, and the small cap gauge might be poised to top the range it's been stuck in since early 2022, end quote. So Ian, the economy is not the stock market for the most part. So it looks like your small cap breakout prediction for 2024 is playing out. So what do you think? What's your take?
A couple things. One, I want to just talk about the CPI really quick, because it did come in hotter than expected. The market kind of shrugged it off. One of the reasons why is that the CPI has a number of different factors in it, right? And one is basically shelter. Okay, that's a component: shelter, food, energy. When it comes to shelter, the way they look at this data is they use rents, and they use what's called owner's equivalent rent. Okay, they don't use housing prices. And what owner's equivalent rent is basically they have 40,000 homeowners that they survey, and they ask them, if you had to rent your house out, what would you pay? And that number has gone up basically 0.6% in the last month. And it's the highest since April 2023. It also looks at about a 6.9% annualized pace. But you have to understand something about owner's equivalent rent. it's not the actual cost of something, it's the way somebody values it, right?
Mhm.
Because you're not looking at the actual rent, you're looking at what a homeowner thinks that they could rent their house out for. A lot of times, they just maybe overestimate, because if you look at the actual rent number, rents are actually down over the last month.
Mm.
So what does that tell you? Homeowners are overestimating how
Mhm.
much rents are.
Right.
They see home prices still going up in their neighborhood, and they imagine that if they had to rent a house in their neighborhood, it would be higher than it was last month. And so I think and it's such a big part of the CPI. The owner's equivalent rent is 34% of core.
Hmm.
Okay. So this could be a very volatile number. Next month, owner's equivalent rent might actually be lower, and you could see a drop in the CPI and the market rally. I think it's one of the reasons why the market, after taking a dip that morning, really shrugged that
Mhm.
economic indicator off.
That's right.
Second part, like you said, about small caps. So this is the way all bull markets start. It happened most recently in 2020, and then before that, it happened in 2009. You have very narrow leadership when it starts. A bull market starts with 5 or 6 names taking off, and everyone complaining that this is not really a bull market because it's not widespread.
Mhm.
And breadth, which means it's a measure of like how many stocks are up versus how many stocks are down, has been very narrow, even though the market's been hitting new highs.
Mhm.
The second part of the bull market is when you start to see the mid cap stocks start to rally, which we've seen in the last month. The third part is when the small caps start to move, which we're starting to see right now. So, people who have been concerned over the last 6 months that, this is not really a bull market because all the gains are in Meta, Apple, Amazon, Google, are really underestimating how much small caps can go up this year, because they at some point they will play catch up. They've always played catch up in every single market, every single bull market. We are in a bull market. The concern right now is like, is the Fed going to cut in? They're not going to cut in March. Okay, they're going to cut in May. Maybe they don't cut till the summer. The reality is the rate hike cycle is over. The
Mm.
rate hike cycle is over. Interest rates are not going any higher they are right now. It's just a matter of how quickly they come down. Whether they come down, 300 basis points this year or 100 basis points this year, it doesn't really matter if you're taking a long-term perspective. Like,
Mhm.
this is the beginning of a new bull market. We bottomed out in 2022. We traded sideways and very narrow leadership in 2023. And this is, the part of the market where, as a mid cap and small cap investor, you're going to make the most amount of money. So, and we've got the banks. Wall Street is also on board now as well, as you noted.
Oh, yes. Oh, I love that. Well, bull market, small caps, here we go.
There we go.
Ian, here we go. So, Ian, in tech megatrends, I'm actually going to let you lead this one because you sent this in our Slack channel to the team about OpenAI's text to video model and how it's just really, people are saying, how is this even possible? So please share what you learned in tech megatrends for this.
How is this even possible? That is the right question to ask. So yesterday, or last week, excuse me,
Mhm.
OpenAI, which is which created ChatGPT,
Mhm.
released a new text to video model. Now, OpenAI has had the text model where it's like, for a year, where you can ask ChatGPT, write me a story or write me a poem in Bob Dylan's voice, and everyone was excited about that.
Mhm.
Then they also did the photos, so you can prompt and say, I want a picture of a bird with a pink head, and pink wings, and it'll create a bird.
Mhm.
Now they've updated their text to video model. So I just want to put this on screen. So the prompt here was: beautiful, snowy Tokyo City is bustling. The camera moves through the bustling city street, following several people enjoying the beautiful snowy weather and shopping at nearby stalls. Gorgeous sakura petals are flying through the wind along with snowflakes. That's one example. Another one here is several giant woolly mammoths approaching, treading through a snowy meadow. Their long woolly fur lightly blows in the wind as they walk. Snow-covered trees and dramatic snow-capped mountains in the distance, mid-afternoon light with wispy clouds.
Woo.
And the algorithm, as you can see, created this actual video. So, Amber, in my mind, it's like, it's over for Hollywood. Like, in a couple of years, all our movies are going to be created just using AI. So, we've been talking about how disruptive AI is going to be. The
Mm-hmm.
media industry is going to be, quickly disrupted by what's happening now. I think superstar actors are still going to be wanted in movies, right? Like, I don't think this is going to put Tom Cruise out of business.
Mm-hmm.
But you saw with the actor strike, one of their terms, the actors basically wanted the rights for any digital recreation of them. And this is why, because right now, you can create something that is hyper realistic. And what you're looking at right now is the worst you'll ever see this in your lifetime. It's only going to get better from here.
Wow.
A year ago, when they would do these videos, it just looked like so bizarre, and now it's realistic.
Mm-hmm.
So that's been the biggest news this week in the tech scene, I believe, and it just shows you where the entire media industry is going very quickly.
That just blows. I tell
And it
you.
also makes me a little nervous for the election this year.
Yeah, yeah. That's something that needs to be monitored intently. Well, Ian, amazing. Thank you for sharing that AI information. Now let's see what's happening in Crypto Corner. Bitcoin 50,000. What's happening there, Ian?
Bitcoin 50,000. Remember, Amber, just a couple weeks ago, we were talking about how it sold off after the ETF approval
Yep.
in January 11th, right? And, you know, we've been saying like everyone thought that the ETF was overhyped. There were buyers that were buying into it. It was a sell the news event.
Mm-hmm.
And, I think it dropped down to like 38,000 at one point.
Right.
And, people see it falling after the ETF and they say, well, if I want to buy some, I'll just wait to get to 30,000 or 25,000, or maybe I'll just never buy, right?
Mm.
Before you know it, it's back to 50,000. It's been like a sneaky move. You got the Bitcoin halving coming up in April, which means that the amount of coins created per block will be cut in half. It's at 6.25 now. It'll be 3.125 tokens created every 10 minutes. So supply is going to be cut in half in April. And I think there's a narrative developing where, Bitcoin is an essential part of everyone's portfolio because it is what's called a non-correlated asset class, which means that if stocks go down, it doesn't necessarily have to go down with stocks. If stocks goes up, it doesn't necessarily have to go up with stocks. It's just something that you can own in your portfolio, and it could be a hedge against some type of global instability or perhaps excess fiat money printing, right? So the government prints too much money and they devalue your currency. You have an alternative currency that will hold value, and that
Mm.
is the belief. Very similar to gold, except with Bitcoin, you can send it around the world as easy as sending an email, and you don't have to rely on a bank or institution to custody your gold, right? I mean,
Mm-hmm.
I mean, there are some people that probably have gold bars buried in their backyard, but for me, that seems
Mm-hmm.
a little risky. I don't know about you, Amber.
Not happening.
No, no gold bars. Okay. So a couple months ago in Next Wave Crypto Fortunes,
Mm-hmm.
we talked about the idea that Bitcoin could have just an amazing year here with ETF approval and also the halving. And my idea was to give everyone a token that represents basically an evolution of Bitcoin, right? So it's like take Bitcoin, there are only certain things you can do with it. You can use it as a form of money and you can store it like gold, right? It's not necessarily programmable
Mm-hmm.
like Ethereum is. With Ethereum, you can use it like a Lego block and build new types of digital infrastructure with it, all types of, digital markets. With Ethereum. So I gave this idea to crypto subscribers that actually is built on top of Bitcoin and it has the same functionality as Ethereum. So it turns Bitcoin into Ethereum. It has, it turns Bitcoin into a programmable form of money. And as Bitcoin has moved up, this token has moved up as well. I
Mm-hmm.
still think that there's an opportunity to buy it, especially if you think Bitcoin's going to go much higher, because it makes Bitcoin much more functional, right? As the base layer where you can program new digital creation on top of. And I know like I'm using a lot of jargon, which is probably going over everybody's head right now. But think of it this way. You know, a use case would be if you wanted to have a a marketplace, right? An exchange where you could trade tokenized investments
Mhm.
but you don't want to rely on the NASDAQ or the New York Stock Exchange, and you don't want to rely on their market makers or the banks that run it. You
Right.
could create a decentralized exchange
Mm,
where anyone who has a crypto asset can be a market maker and can make those market maker fees.
mm,
And so what Bitcoin first did is it allows you to exchange something of digital value peer to peer without a middleman. And what decentralized finance does, it allows you to build a banking infrastructure where you can extend credit, you can borrow, you can build derivatives and options markets, but you don't have to have a bank that oversees it because the blockchain secures all the settlements and trust. And
mm,
so what this token does is it allows for the creation of all those things on top of Bitcoin, which is why I'm so excited. The last point I'm going to make about it,
mhm,
that, Amber, in this market, everyone's really worried about whether or not these are registered securities. Some of these
mhm,
tokens, you see the SEC suit against Coinbase saying that, a lot of these are unregistered securities. We're going to have to shut
mm,
them down.
mm.
That's kind of on the wayside. This token actually went through the entire process of registering with the US government. They
Okay.
did a Reg A Plus token offering way
Mhm,
back in 2018, which allowed them basically to sell to accredited investors here in the United States and distribute it in a way that would follow securities regulations. So this, in my mind, it would be the last token that the SEC actually cracks down on. So you have a lesser risk of that just because they went through the whole registration process where a lot of other tokens didn't do the same thing. And
mm.
that's why I'm so excited. We recommended at 80 cents. I think it hit like $3 the other day, but I still think there's much more upside to it. So please check out Next Wave Crypto Fortunes to learn more about that idea.
Definitely. I love that, Ian. And everyone, if you want to learn more about Next Wave Crypto Fortunes, please click the bull icon right here over my shoulder if you're watching us on YouTube, and you can get those details there. Fantastic.
Awesome. I'm sorry, I get excited about this stuff, so
I,
sometimes I get a little too deep in the weeds. So,
it's okay.
but we try to do our best at explaining it because crypto is like you kind of need like an economics and a computer science background to really understand some of these projects out there. And so it's not, when you read a white paper, it's not necessarily something that is like reading like a New York Post or anything like that. It can be very like technical, and what we try to do on our service is explain it in a way that you can easily understand it so you know what you're investing in.
Awesome. Okay. Well, Ian, great information. Thank you for sharing all the above. And thank you, everyone, most importantly, for tuning in and watching. That's it for this week. If you do have a question for us to answer at next week's Market Insights, please email us at marketinsights@bannonhill.com. We look forward to hearing from you. So until next time, on my behalf, please take care. Ian, have a great week.
Thanks everyone for tuning in, and we'll talk to you next week. Have a good one. Bye-bye.